Hey traders, checking in on the stock market today. A drop first thing in the morning to get daily consolidation underway in most of our major sectors. And then we traded sideways with not a lot going on. Is this healthy daily consolidation about to lead to new all-time highs or something more? I'll show you the clues that I'm looking for. So SPY has broken the pattern of a higher low every day that was intact for 8 days, leading to daily consolidation. I'm going to keep it simple and say that if daily EMA 12 is still support, it's a possible bull flag. So every day that's going to inch up a bit further. And we're watching for first hourly oversold conditions as well. We did not get there today. And if we break the low of today tomorrow, we'll be looking for the back burner hourly oversold bounce. If we see bear volume and a pullback losing the daily EMA 12, that will be significant enough that we then scout a daily lower high to be the result of the next bounce. But at this point in time, there are no red flags on this consolidation. So the bears would have to show up with volume and another percent to the downside plus if we were going to be looking for any kind of real weakness. There is no red flag whatsoever at this point. We know that can change, but we have to see bear volume for that to change. QQQ, a little bit weaker, but in the same boat. Lost a pattern of a higher low every day. We're looking for a daily higher low. EMA 12 is going to be our guide, and the hourly RSI did get right down towards oversold into the end of the day, but not much of a bounce from it. I'm focused more on SPY, and we'll see what QQQ does once SPY gets to hourly oversold, if that is indeed coming. So I am still in my SPXS partial position, and I plan on holding it as long as we're in an hourly downtrend. That's going to be my guide, and once the bulls prove something to me, I will exit, anticipating a daily higher low is the most likely scenario, but keeping that position for now. And we're going to be watching bounces for hourly lower highs on QQQ. Anything under the high of today is an hourly lower high, and we have to see a big enough bounce for bulls to set up the hourly trend change back in their favor for daily higher lows to be set. So no red flags. Yes, there's an uptick in volume. That's definitely worth keeping an eye on. Most of the volume was on that initial drop, but bears need more. IWM, daily consolidation underway, coming off the all-time high. You can see with the lower wick, bulls buying the dip more significantly. You compare it to QQQ, and it's a different looking daily candle. So a more significant hourly bounce. We did get right towards hourly oversold, and a bit of follow through from that low. Not significant, but again, we're scouting the daily higher low. EMA 12 will be a guide. As for the potential of a bull flag. So pretty much all of these three names coming off all-time highs, daily consolidation, no red flags at this point. Volume and bear follow-through will be needed. And what else we need to see is all of our major sectors, XLF, QQQ, XLV, hitting the low of the day at the same time. We were very close multiple times today from that happening, but it didn't really happen. There were times where SPY would hit a new low of the day, QQQ wouldn't hit a new low of the day, and then SPY would bounce on the low of the day with no follow-through. XLF, bull still clinging towards support here, trying to keep the weekly bull flag alive. 39.69 support held initially. I've got resistance, 40.53, 40.68, 40.86. And the bears have to break 39.69 for continued daily downtrend to try and negate the weekly bull flag. But again, same thing. EMA 12. We'll say if EMA 12 is support, it's a potential weekly bull flag. So still no red flags in the broader market for me. Just healthy, very overdue consolidation. XLV. So we know if the bears are going to prove anything to us here. We were talking about yesterday how we have to see the lower high and then lower low to set the weekly lower high and tightening equilibrium. So it's up to the bears to prove it to us by breaking 131.90 support to result in a lower high and lower low. If that does not happen, bulls are just fine. So 131.90 breaking would indicate the weekly lower high is being set. The biotech sector. So a good point in yesterday's video saying, yes, daily consolidation is underway. It's an inside bar. We're scouting that higher low, but I know the broader market is due for consolidation and it hasn't started yet. And that broader market consolidation, when it does happen, can easily weigh on this sector and lead to another leg down, which is exactly what we got with a bear break of these two support levels first thing today and some solid follow through from that. So now here's an example of retracement size where the retracement size is significant enough that we are going to scout a daily lower high to be the likely result of this next bounce. It's over a 50% retracement as opposed to 382, which could indicate continuation. So we're still scouting a daily high or low, anything above 122.06. But once it's found and once the bulls change the hourly trend back in their favor, we scout the daily low or high, anything under 134.79. NVDA, big gap up open, but profit taking with broader market weakness. And bears are going to be watching for the hourly downtrend, which is already intact, lower high and lower low today, to follow through. We have to break the pattern, the stair-step pattern. Higher low every day for the last, 14 days or so. Bears must break 299 tomorrow for daily consolidation to be underway. And NVDA and AMD will both be on hourly back burner watch after their all-time high runs, also looking for daily higher lows to be the result of any pullback. SMH, the ETF, 9 days in a row, higher low every day, and did break hourly support, but have to lose the pattern of a higher low every day. Tesla, massive follow through for the bears. It's almost like they got a chance to sell yesterday. We had the Elon Twitter over the weekend. Not too bad yesterday, but just big rollover sell off today and got crushed. RSI was real beat up. Hourly RSI got to the low 20s. 15-minute RSI got down to the low teens. It was single digits. And 5-minute RSI also down to single digits. I was playing this bounce today, and I was live streaming while doing it, and it went all right. It's actually funny because I ended up with just over a day maker, maybe a day and a half maker, and I consider it a failed trade. So nice when a failed trade gives you over a day maker. But why was it a failed trade? Because it was significant opportunity. We had a 6.5%, 7% bounce. Well, let's just go to the first 15 minutes here. The first 15 minutes of the bounce was a 6% plus bounce. So I was scaling in, and my initial entry, a bit too soon, is what it really boils down to, the first entry. And my first entry was 1093. And you can see that 1 5-minute candle went a lot deeper than that. And I entered a second position at 1073. And then my third position, this one was real fast. My third position wasn't as good a fill as I wanted it to be. And I'm doing market orders when it's this fast, as it's generally liquid enough. Yeah, that makes sense. I did get filled on that last 1 minute candle, but it was 1057, so a bit towards the high of it. And that's a big difference. That's a 2% difference from if I got filled down at the low of that candle. So once those 3 orders filled, I said that my stop loss would be on a break of 1030, which very fortunately did not break, because it's a scenario where longs are getting liquidated. To drop that hard and that fast, there is massive liquidations taking place. And the last thing I want to do is get stuck in an oversold bounce attempt that drops a lot more significantly than I think it will, and end up with, a 3-week loser if it just doesn't bounce and an anomaly happens. The 1 in 20 times, the 1 in 40 times where it just ends up being a complete all-out dump for the next 2 hours. So I would have stopped out very unhappily, and it would have been a big loss. It would have been a 4-day loser, maybe a week loser. But fortunately, the bounce got going shortly after that, and I was scaling out. We'll use the 1 minute time frame. So scaling out, exited the first position at 1073, which was my middle fill. So essentially now I'm down to 2 positions, 1093, 1057, which gives me a break even of 1075. And you just add those 2 together, divide by 2, there's your break even, 1075. So from there, I looked to sell a bit more. The initial bounce topped out at 1083. The last thing I want to see there is a bounce to 1083 and then a drop to a lower low. So 1083 was hit. We started pulling back a little bit. Sold my second position, maybe at 1070, a little bit under my break even. But what that does is it gives me my capital back. It's ammo. So I had 3 bullets. I fired all 3 bullets. My gun's now empty. And when I'm selling on the way back up, I'm getting my bullets back for in case we do see another leg down. So selling at 1075, now my average is 1080, we'll call it. And I fumbled this play. This was the make or break from a big win to just a regular win. And this was me looking to enter a 1 minute higher low. and rebuying at 1060. And I think my biggest issue here, we got a little bit of a bounce, started, got back into the 1070s, and then we came back to 1060. And you can't really even see it on these 1 minute candles. We got to go to the 15-second time frame. That's how fast it was happening. It seemed like it was a lot slower. But filled here, 1060. We bounced up to 1070. Got up again, 1070, 1071. And this drop right here scared me. This 30 seconds that we're about to roll over to test the low of the day. And so I exited pretty much break even, 1060. What I should have done is put my stop under the 1 minute high or low at that point of 1055. Because then I'm just risking $5 and I'm playing off a support, not just a level that I entered at, which isn't a support level. That would have kept me in 2 positions, and my average would have been 1070, and we would have then followed through. And you know, if I sold at 1100 from there, that would have been a 3+ day maker. But because and honestly, now that I'm reflecting on it, I think it was just that I had the mindset that I was maxed out on the order sizes of what I was willing to take on this trade. And so if we had rolled over, you know, I didn't want to be stuck. But in reality, at that point in time, I had already gotten 2 of my bullets back, and I was a lot more comfortable with position sizing and with cash ready to go again than my mind was leading on to believe. So that was the mistake. And exiting break even there, my average stays 1080 with a single position instead of 1070 with a double position, which is a very big difference, because then we got some follow through and I sold half in the low 1090s and I sold the other half in the 1090s as well. And it ended up being a bit over a day maker. So it's a win, but it's the difference between a day maker and a potential 3+ day maker. So just little reflections. But overall, could have been worse. So, not too bad. With Tesla tomorrow, I want to see a gap down open. I want to see 4-hour oversold and hourly RSI beat up. I want to see, we got 944 support, but I'll be looking to play Tesla for a daily higher low. Broader market's going to be key for me. I want to see some strength in the broader market trying to shape up a daily higher low to help with a Tesla bounce attempt. But I'm not going to be trying too early, and I will be quick to exit. And again, if I want to be in a situation where if I'm making mistakes trying to play this bounce, I'm leaving money on the table, not losing money. And that was the case today. My mistake caused me to leave money on the table. My mistake did not cause me to lose money. So that's the conservative mindset that I take at this point in my trading career more often than not. Hourly resistance, 1061. We'll see what pre-market gives us tomorrow. Dollar. So dollar, we're still watching this rising wedge. Daily higher low support, 93.82 being tested. And I really don't care unless one of these lines breaks, really. Bigger picture is what I care about. Gold. Testing weekly resistance, 1834. We are right there. If we reject, we'll have to set a daily higher low, but there is space for that daily higher low. I like the way this trade is shaping up. I will add to my positions in both gold and silver next daily consolidation. I will average up. And my stop will be based off of the start of November low. Silver was a little bit weaker than gold today, but it's very similar. If we fail 2483, it's a daily lower high, and we then scout a higher low compared to 2302. And again, I'll look for an entry on a daily higher low, and I'll use 2302 as a potential stop. Miners are still stronger. Close at the high of the day. Silver didn't close at the high of the day. Gold is stronger than silver, but gold is at the high of the day. But miners are still strong, and 33.95 is the key resistance there. So really a key test for gold right now. And that's what we're watching tonight into tomorrow. So that's where we stand. A little bit of consolidation in crypto after Bitcoin hit a new all-time high. Crypto stock seeing a bit of a pullback. Coin just had earnings. That was a big bear reaction. So could see some momentum shifting away from those crypto stocks. Watching for daily consolidation there. And other than that, a lot of volatility in the cannabis space. I'm going to do a cannabis and psychedelic video now. do good things. Thanks for tuning in. Appreciate you watching.